Hello, Sarah Luke Combs. Welcome to your comprehensive insurance report. It'll be presented by me, Peter Kirschut, and my partner, Maria Ramirez. The outline of the report will be following the financial statements, then an assessment of both your risks, recommendations for those risks, and then monitoring for those risks. Going over your financial statements, you guys have a very healthy net worth, over $1 million. However, it's primarily in the principal residence. Retirement savings are great and will be of significant contribution later on. And you guys have a very healthy emergency fund, which covers the recommended minimum of 3 months of expenses.
As per the cash flow statement, we can see that currently in numbers you have a negative cash flow, which could mean that you're living beyond your means or you're using debt to finance all your current expenses. The good thing about this is that you're saving successfully about 10% of your combined income. And currently, it seems that your debts at this time they don't seem to be a big issue in the negative cash flow.
Now going over your risk assessments, we'll be following these key areas such as your deaths, disabilities, extended healthcare needs, home, property and liability risks, the rental risks, and automobile risks that you two face. Going over your death risk, Sarah, the probability of you in your current position and with your health is low. However, the severity is high and would be financially unmanageable. You take up over half of the income for the household, and your coverage from your employer is something the family depends on. Luke, you would also be of huge financial burden that would be unsupportable by Sarah alone. And although the probability is also low, the severity would be high in that case, as you also take up a huge chunk of the household income and provide benefits that the family uses.
So moving on to short and long-term disability. So for you, Sarah, the probability of falling into disability is relatively low, given your current activities and your current job. And it's good that you have coverage that would help you in case you were to fall in this area. As per Luke, your risk is higher due to your hobbies and current position at your job. But it's also good that you have some sort of coverage within this area as well. As per the extended healthcare, so for Luke, we see that the household relies primarily on Sarah's coverage. So this is a very, very big risk because if Sarah was to leave her job or the coverage would stop, then that means that Luke wouldn't be covered, especially because his current health insurance is not sufficient.
Going over the property risk of the home, currently you guys do have comprehensive insurance, but with some of the recent additions, such as the overground pool and goals of future improvements of deck and washroom, some of this may not be covered, such as your current policy not covering any leakage or damage from water that is increased. This risk of damage from water is increased by your pool. And liability risk, you guys are currently way under the recommended amount of coverage with only 500,000. Your rental unit increases this risk due to third parties being on the property more often than other homes, as well as their property, such as their cars, and there's a shared lot that increases damage to liability in your home. Rental basement, you guys are currently uninsured, and there is that risk of a rental being damaged by the tenant themselves, and that this causes damage to your basement, your home that you would have to cover, as well as risk of losing income from that rental.
So for your car, Sarah, we can see that the chance of an event where loss would occur due to your fault, it's relatively moderate due to your long history of driving and almost zero offenses, only one offense, which is considered minor. And you have a great coverage, which is on the recommended amount of $1 million with additional for accident forgiveness. As per you, Luke, we see that it's relatively the same as per probability and the chances of an event occurring. We can see that you also have the current recommended insurance amount of around $1 million. However, we see that the current coverage is expired on October 15th, so that's something we should keep an eye on.
Now going over some of the recommendations for your risks. We start with your life insurance needs. We recommend that Sarah, you get roughly $350,000 in coverage, and Luke, you get for yourself $500,000 in coverage. This is rounded up to the nearest 50,000, and this will include all future living expenses for the survivors. It includes coverage of all the gifts, education, that you have as a goal for your children, and any debts, mortgage, and outstanding loan line of credit. This will also cover any retirement shortfalls that your retirement savings would not be able to fund. Some of the assumptions we made for this life insurance is that your groceries are about 25% per household member, which would be reduced during your lifespan. Each child accounts for about 50% of their extracurriculars, as well as the cars being sold of the deceased and maintenance and gas being reduced equivalently by 50%. Cash withdrawal reduced by 50%. Auto insurance will be reduced down to your individual premiums that you provided from your second meeting. And extended health plan, we assumed would be part of Sarah's life insurance to cover where it was in Luke's expenses that was included in Sarah's life insurance. From 65 to 95 in your retirements, all expenses we assume would be reduced by 40% unless specified by you, such as your condo fees. And all of these previous assumptions that were reduced would be further reduced by that 40%. Landlord insurance. We recommend you get landlord insurance to cover any damages caused by current and future tenants. This will be huge as the financial burden will be possibly unsustainable or uncoverable, and it would cover any losses of rental income caused by the tenants and damages, which could be for an unknown timeline, and it would be $2,000 of lost income per month. Other preventive measures can be taken, such as stricter screening, making the tenant get their own insurance, and so forth. Critical illness, we recommend that Luke obtains critical illness that covers for heart attack and stroke risk, given his high blood pressure concerns. There's added benefits to this insurance, such as tax-free payments and more policy options that your disability wouldn't cover, such as partial payments in case of not as severe of a critical episode, or the return of premium if you never execute on the policy, and automatic increase benefits follows the inflation rate, so you always get up-to-date coverage.
As per the health insurance, we highly recommend for Luke for you to get an extended health insurance because in case of you're insured under Sarah's policy, and it will cover current and potential needs. However, if Sarah was to lose her current job or her current coverage, or she was to move on to like different endeavors, you would lose that extended health coverage, and then you would have to pay out of pocket for any additional health needs. As per the current policy updates, so for home insurance, we see that we recommend that you add the optional coverage for extended water damage, especially since you just added that above ground pool. It would be very beneficial, as well as to increase the policies on the home value coverage, increase the deductible, so that way your monthly payment can potentially reduce, and increase the liability coverage to around $2 million to reflect all the previous risks that we outlined before. As per car insurance, we recommend that you increase your deductible for both in case of any future accidents, especially since Luke's your car is starting to age. So I know you're planning on changing it, but if you don't happen to change it, it's important to increase the deductible. Then we gotta review. Then we gotta review the policies to make sure coverage is appropriate for both cars, and get a replacement cost coverage for new vehicle, and make sure Sarah's Honda is also on that coverage.
We should probably restart that because I talked while you were.
Oh, okay. All right, this is gonna be the good one. We are at 9 minutes here.
9 minutes all in total. You're still recording, by the way.
Oh.
The next recommendation is critical illness insurance, specifically for Luke. We recommend that you get coverage for potential heart attack and stroke risks that are brought up by your high blood pressure. And we think this type of insurance is a lot more comprehensive and will give you more options. Tax-free payments. as well as policy options that you don't get from your disability insurance, such as partial payment from the policy in case the illness is not as severe, the return of the premium in case you never execute on the policy, as well as automatic increased benefits and other options like this that keep up with the inflation and costs and give you the necessary amount of coverage for your illness.
In terms of extended health insurance, so for you, Luke, we recommend that you acquire an extended health insurance policy, because you're currently relying on Sarah's policy. And if, in case of a loss, if Sarah's coverage doesn't cover, or she stops working at her current job and loses the insurance, your out-of-pocket costs could potentially skyrocket. As for the current policy updates, we are recommending that you add some additional optional coverage for extended water damage, given that you just added an above ground pool, and we should control that risk, as well as increase the policy's home value coverage, increase your deductible in order to get your premiums or your monthly payments lower, and increase your liability coverage to around $2 million to reflect all the previous risks that we outlined earlier. As for the car insurance, we recommend that you both increase your deductible since you are considered low to moderate risk. You have been driving for around 25 years to 30 years, and you have had almost no accidents. So we think that it's beneficial to increase your deductible. Also review your policies to make sure the coverage is appropriate for the cars, especially as they age. They might require a bit more coverage, and get your split replacement cost coverage for the new vehicle, and make sure Sarah's, your car is also part of the replacement coverage.
Now, the last part, look at some advice in monitoring of these recommendations. Life insurance, you guys should be monitoring on a 6 to 12 month basis to ensure all your liabilities and expenses are covered for. Ensure that the appropriate coverage is there at all times. And if there's any changes to these liabilities, expenses, assets, incomes, goals, to address this and review the policy to make sure that the coverage is sufficient or that there isn't too much coverage for your policy.
As for the landlord insurance, we recommend that you also get this for the basement. We have to make sure that the coverage is aligned with the changing value of basement every year. As well as if you do any further renovations, upgrades, or there's any change in price and utilities, we should account for that as well and update the coverage accordingly around every 6 months to 12 months.
Critical illness insurance, just make sure you're addressing any updates in the health and obtain further coverage if any additional illness concerns arise for you, Luke. And for you, Sarah, continually monitor your current health and begin to look for coverage if or when there is risks that begin to rise, such as growing signs of your dementia, hereditary risks, or even after a certain age when risks increase for dementia, such as 60+ years old.
As per health insurance, we recommend that you both regularly track your expenses and coverage needs annually. This could be if, for instance, there's a change in one's health, then we can update the policy accordingly, as well as adjust coverage out of pocket in order to reduce those costs. For example, once you have your orthodontics done for your kids, you can adjust your policy to reduce the monthly payment on the policy.
And other further policy monitoring to look at any property additions, renovations, appreciation of your property value should be regularly updated and addressed within the policy. And auto insurance should be periodically reviewed annually at least to ensure that the coverage is appropriate and adjusted accordingly, especially as the car ages, to make sure coverage is sufficient and to avoid any overcoverage. Thank you.